You are looking live at the Russell 2000 index, which has actually gone up 2 days in a row. How about that? Can we have a bottom here? Maybe. Happy Halloween, everyone. Thank you for tuning in. There you can see the Russell made this low here last Friday. Yesterday had a little insight day, and today got above the high from last Friday. Let's get a reading on that. You can see it closed near the high of the session. Yay. And it was 16,663 there, 1,663, which was the high for this session. The high on Friday was 661. So it took out the high from Friday. And maybe, just maybe, you got to think positive. The Russell 2000 is at a bottom, maybe on its way back up on this last day of October. Maybe November will bring it better fortunes. You can see the moving averages are trending, straight down. And I always ask, are the institutions supporting the market? Because you have to follow the institutions. And I would say at this point still, no. This is the Nasdaq, a daily chart of the Nasdaq, which gained 62 points or 0.48% on the below average volume. You can see the last three sessions, they've been up in below average volume, which tells you that these institutions are not supporting the index. The important thing about the Nasdaq today is that it recaptured its 200 simple moving average and is now trading 4.4% below that red line, which is the 50 simple moving average. The shorter term 21 and 10 moving averages are all trending lower, but with a couple of strong days, they could start trending higher as well. That's why they're short-term moving averages. The S&P 500 index is not doing quite as well as the Nasdaq. It's still 1.1% below its 200 there. So it needs to get through, the 200 before it can get through the 50. Also, the 10 has crossed below the 200 here on the S&P. So it has more work to do. I'm going to get to the stocks now because I like stocks. I don't trade indexes, although you do need the indexes, tailwinds to be successful for longer term in the market. It's very difficult to trade what I would call upstream, like a fish swimming upstream. It is difficult. This is Apple, and it did not get through its 200, but they report earnings on Thursday after the market's closed. So all bets are off until we get the new data points from Apple. Microsoft looking pretty good here on this little double bottom pattern. The last, 4 sessions, it's been up, with the index. You can see the double bottom there as it went from 340 to 309. Had this nice move on earnings and pulled right back to its moving average, but still trending higher. A little inside day today. Not bad for Microsoft. Much better than our friend the Google, the Internet King, which sold off with earnings last week and then continued to the downside like a follow through. There it was down nearly 10%. And then on Thursday, 3%, Friday, a little tick lower as well. But now maybe it has bottomed and it rallied a little bit on Monday and kind of flat today. But you can see the big volume selling here on the Google. Meta Platforms, this one's just trading sideways. They have sold off. You can see the big volume sell off here on this day, nearly 4%, but it's recaptured. It's 50 and then lost it today slightly, right? Less than 1%. So we're going to keep our eye on Meta Platforms. Not doing too bad in this downtrending market. Amazon looks much better here since its earnings report. Big move with volume here on Friday, following the report, nearly 7%. Followed through yesterday with a move, and again today, it was up slightly. Yesterday was up, nearly 4%. So that's a nice move there on the what you could call that a shakeout +3 there, where it had a bottom and then a hard shake on the second bottom and then rallied more than 10% from that 118 level. So that is a nice shakeout +3 pattern for Amazon. We like it. Tesla just keeps going lower. It rallies up to moving averages and just gets pushed down. So this is in a free fall. It's trending lower, as you could tell by the short-term moving averages, all trending lower. NVIDIA, we talked about this head and shoulders action here, and it just has no strength. I don't know. AMD reported after the bell today. It doesn't look like it's going to help much. As NVIDIA's down after hours, there's your head, and then there's your shoulder, and then boom, trading lower. Traded below 400 for a couple sessions now, so NVIDIA is weak. I'm going to go through some stocks today, do a different format. Just take a random walk of earning stocks, then some stocks showing relative strength. And I have to go to Arista Networks because I discussed that shakeout +3. Here's the first shake, and then the second shake. And the idea is that the second shake is more intense than the first, and it goes lower, so it makes a double bottom pattern. Then it rallies up 10% or more, which it clearly did here. I don't know what the low was last Friday or was it Thursday after the Meta Platforms report. This thing got hammered and went down to 168. Yeah, now it's a 200, nice $32 move. So yeah, nearly a 20% move for Arista Networks, and they reported earnings and said they had no ill effects from the Facebook. What they said they were going to cut CapEx spending. So we'll have to wait and see on that. And they won't report again until next year. Deckers is one that reported last week. The HOKA sales were up nearly 30%. The UGG sales nearly 30%, even though some of their other categories saw a decrease in sales. The overall was just phenomenal. The margins improved, from 50 to 51. Sales growth 10 to 25, earnings growth 45 to 79. So this thing's hitting on all cylinders. After the gap up on a Friday, where it gapped up nearly 19%, yesterday added another 1.5%, today another 2%. So Deckers is showing strength after their earnings report. Pinterest reported last night. Very nice response here, up 19% with more than 500% above average daily volume. We're going to keep our eye on that move. Pinterest looks good. Yeah, they have a new CEO. Maybe this one actually knows what he's doing. This is MPWR, monolithic power. And you can see this like wedge type pattern. You could say it broke above a downtrend line. That's like a falling wedge. Couldn't go down any lower. Went up on earnings, a nice 9% move. So that one looks like it might start to recover. This is a COCO, Vita Cocoa water. Got through its 50 today. It's really tough. I'm going to go through this selling when a stock slices to 50. It's usually beneficial for you. But it traded down to its 200 and bounced today 16% with heavy volume. So definitely one to keep an eye on, especially above that 50. MUSA, this one went up recently on, I wanted to say CASY's earnings. And then they have earnings tomorrow. So definitely one to watch. This one broke out and pulled back to the 21, but they have earnings tomorrow. So we're going to hear from MUSA. And since I mentioned CASY, they reported earnings, I don't know, about a month ago, 3 or 4 weeks ago on this date, obviously. The big jump higher, more than 11%, followed through, traded up to 284, then pulled back to its 21, which was roughly about 260, 268 there. So, and then, ramped higher. Right now trading about 272. So CASY's holding up, just consolidating in this flat base pattern. It's not a real fast move. As you can see, base, move up, a base, move up, another base. And that's pretty standard. And that's really good for this current market that we're in. CCJ, they reported today, I think they were about 6%, 8% move. Nice. So that's a nice earnings move with volume here for this mining stock. Let me see. Logitech. Okay, this is last week here. What date was this? The 24th. So last Tuesday, exactly a week from today. Had a couple of days of profit taking, and now is ramping higher. So very nice. You can see that one closed at 95% of its daily range. There where the high was 77.32. Pull back a couple days and now makes a higher high above the prior high. So Logitech looking good. ETN, I don't know why I posted this one. Earnings report was strong. Oh yeah, this one is one to watch. I'm going to zoom in here for follow through on earnings, because it looks like it might try to break above this trend line where it touches the second place and now the third place. So if it breaks above this downtrend line, this could be perceived as a bottom. And Eaton is going higher on their earnings report from this morning, where they showed accelerating earnings growth. So that's good, 22%, not bad. FCN, I don't know anything about this consulting company. I just know that it ramped on earnings and now it's pulled back like 3 consecutive sessions. So yeah, it closed at 99% of its daily range on a nearly 300% above average daily volume. A nice 17% move. So definitely keep an eye on that one. They're not going to buy all at once. They're going to come back later and purchase this one. This is TradeWeb Markets, another one. I don't know what they do. I just know that it had a nice move, and then I had a little profit taken. Now made a high above the prior high there of 90.12. Today 90.34. So making a new high is definitely something interested in the earnings reports. I want to go to some stocks showing relative strength that may or may not be on my watch list. This is OLLI. It sliced its 50 here, traded sideways, then rallied back through it, showing strength as it just consolidates in this flat base pattern here. So I like the looks of that. If the market would just behave, I mean, geez, we've been in a 3-month correction here of 12%. It's about time it starts to get its footing. This is Gallagher. It's just showing relative strength in a weak tape. You can see it's getting supported. It's 50 and traded above its moving averages. That's why I showed that one. Yeah, that is relative strength. RELY, do not know what this one does. A financial services, but definitely showing relative strength there. Support at its moving averages. ACGL, this one was on our watch list, and then I took it off as it broke out from like 80 to 88, and then once you get a 10% move in this tape, you got to take it. Pulled back to its 21, and now today ramped, I believe, on earnings, nearly a 5% move. So that one looks good as well, showing a relative strength. Now, some of the oil and gas stocks, they're just ramping higher. I mean, I'm not saying this is a place to buy it, but they are showing strength. This is Frontline. You can see the RS line just pointing higher. That one is definitely showing strength. RRC, this one has been on our watch list for weeks, and I gave up on it. I didn't put it on this week because I had other oil and gas stocks, but I do like this one. It's up more than 3% this week. You can see the long consolidation, cup with handle pattern, and today made a nice move of 3.5%. and close near the high of its daily range. So that's what you want to see. Definitely supported here at its 21. So you just got to be patient with some of these. TNK, TK Tankers is oil and gas transportation stocks. Definitely still setting up in a base. If you look at the weekly chart, you can see this consolidation. Yeah, for a long time, 33 weeks. So that one is showing strength. And the last one I'm going to show is VRNS. It's a software stock. I believe they had earnings and not bad earnings report. I didn't think it was all that great, but you could see this bull wedge pattern, which I refer to at times, where it consolidates in a base, tries to break out, and it's just kind of like a fake out. Then profit takers come in and say, no, we're going to sell this thing off. And it pulled back to its 50 after the breakout, and today ran higher. Nice move, 6.8% with massive volume. So definitely one to keep your eye on. And like I said, that's it for today. Thank you for watching, except for I have one more thing. I just wanted to point out that I have a rule that I sell stocks when they slice their 50 simple moving average. And, I don't care how much you like the stock or how much you believe in the story. It's just, a rule that I have, and I usually stick to it. But this one, not always, rules are meant to be bend, but this is CROX that I had to sell after earnings back in April. And then they gap lower. It did rally back through the 50, but they gap lower again here in I think it was the first week of August. But anyway, they report earnings on Thursday, and so stocks that gap like this tend to continue to gap. But right now, this looks like it's a rounding bottom pattern. I wouldn't be surprised if it rallied above it to 100, and I wouldn't be surprised if it got slapped down again at this moving average back to the 80 level. So we're gonna have to wait and see on their earnings on Thursday morning. But the point is, you sell here, you sell here at the 50 when this thing's trading at what 120, and it saves you all this pain of trading back to 82. A $40 haircut. No, thank you. That's 30% move. ELF is one that I wanted to point out. Some people give me a hard time. I don't hold ELF. When it made this move, I actually thought that it was going to, after this big gap to 137, I thought it was going to form a base then. But they made an announcement. They bought a company, and it was well received by Wall Street, and went back up to 139. But seriously, that's when it started to sell off and form its base. It does have a gap in its chart here at 86.71. It made it close today, 88.47. So they report earnings tomorrow morning before the bell, and I don't think this story is done, but I would like to see it just form a base here of more than a few weeks. You can see here, this is where it started to trade lower here back in August. So it's been a couple months now that ELF has been consolidating. So just give it time, let it rest. Stocks don't go up in a straight line. It'd be great if it could just form a base for another couple of months, and we'll keep our eye on it. But that's the reason why I do sell at the 50, because they usually had lower. Celsius again sold at the 50, and then it went down to 150, rallied back up, and then got pushed back down. And now it's getting pushed back down every time it trades up to its moving average. So Celsius is looking pretty weak. SMCI, this is one that probably my best trade of the year. I'm going to change the color here. I had it at 90 and sold it at I want to say 330 and then 357. But then on earnings, it sliced its 50, and a couple guys were in there trading it with me, and then we just sold out on that day. The last tranche, it was like a third, so I had like a 10% position. I had like 35 or 38% position in this thing, so it was one of my best trades of the year. But so anyway, the point is, doesn't matter what I do. Who cares? Who cares, Marty? You sold it at I want to say about 270, and then now today it's at 240. But it did rally back up to 317. Now has fallen off, and like I said, you can always buy them back again, right? If you really like SMCI and you made this trade, you can always buy them back. I did buy it back, and I had a losing trade. And usually when I buy stocks back, I lose on them. But there's your double bottom, and then now it's sold off. They report earnings tomorrow morning before the bell with after the market closes tomorrow. Excuse me. TGTX, another one, strong trade for me this year. Had it at just breakout. When did I buy it? I bought it last year, the last day of the year. I entered it in a contest, and then it ran up to like 35. And I talked to a couple of friends, and they said, Marty, it's a biotech stock, take your blessings. And then, so I did sell some near the top, but when it sliced to 50 here, it was on some news. I forget, they weren't selling as well as they had hoped to. And it sliced its 50 there at about 26, and then traded down to 7. So that's why I like to sell at the 50. And even now, the 21, I'm finding if you sell at the 21 just partial, sell at the 21. If they don't get support at the 50, then you can sell the rest at the 50. But a lot of stocks now in this downtrending market, when they slice their 21, they tend to slice their 50 as well. VKTX was another one traded early in the year, and it sliced its 50 when it was, I don't know, $20. Now it's below 10. So these biotechs are dangerous. Once again, once it sliced to 21, I should have sold it. Even if it trades higher, who cares? At least a partial, right? And then once it slices, it's 50, it's adios muchachos. And I just wanted to point that out. That's just a rule that I have. You can do whatever you like. It's served me well over the years to save me from, horrific downturns. And a lot of these growth stocks, when they sell off, they don't come back. So if you're a trend trader and trading growth stocks, that's very dangerous to hold stocks hoping that they're going to come back. Anyway, that's it for me today. Tomorrow is the first day that we can have a follow-through day. Day 4. It's Halloween tonight. Don't eat too much candy. Stay safe out there. And at mcstockcharts.com, we never give up.